Hello guys, welcome back to ESENtaxa. Andrea Babetto here. In this video I'm going to talk about the exit tax. What is this type of taxation? What is this new monster that is going to be spread through all the Europe, through our world? So basically it's a new type of taxation that a lot of countries nowadays are more and more approaching and using to tax their citizens before leaving their respective jurisdiction. Now, before moving forward, I just want to remind you that ESENtaxa talks about how to optimize your taxation if you want to move to a specific country. So we help clients to understand tax-wise if their location to that specific country in Europe makes sense or not. So basically it's too expensive, or just you have to change destination because you were in doubt between one or two or three jurisdictions. In the description below the video you have our calendar link to book a consultation, and also to look at our academy, or simply write us at info@esentaxa.com for any type of questions or type of consultations you might need. Now, what is this exit tax? How does it work? And how different countries implement the tax differently? And how can you avoid it legally? And how we can help you to avoid these taxes or reduce it as much as possible. Now, before moving to a specific jurisdiction, not just the taxation, it's part of the examining the analysis, but also the potential exit tax that you might encounter in the future. Because when you have a certain kind of wealth which relies on capital gains, it's most probably the most aggressive, it's the part of your wealth that will be subject to this type of taxation, okay? So the exit tax, basically, it's a taxation that you pay on your latent, this is the law says, latent capital gains. So basically, as soon as you switch tax resident, the country in which you were tax resident wants you to sell him all your capital gains, and actually you're not really selling anything, but they want to see, in case of selling, the worth, the value of your assets, and tax as it you would sell to somebody at that moment, as you would sell them, as you would sell to that country, exactly the amount. Of course, things remain at your name, don't worry, but the country wants to do this operation just to calculate the taxation. Of course, each jurisdiction applies a different rate, tax rates, okay? And also, different jurisdictions apply different manners of type of taxation based on your type of assets, type of capital gains. Some exit tax are only on company shares. Some other exit tax are implemented also on real estate, so on the capital gains that you realize on real estate. So when you move to a specific country, now we need to also analyze what is the potential exit tax that is implemented or is going to be implemented. So it's extremely important also to analyze the direction that the country is going to move towards to. For example, European countries, it's true, they are more and more greedy, and they are basically asking more and more taxes, especially to wealth individuals. And exit tax is one of this trick to get some wealth back in their pocket, let's say, in the country's pocket. How it works in most of the cases. Now, in Europe, for example, how it works, the exit tax works especially for companies and not to individuals. So there is an European law which has been absorbed by all the European countries that basically says if the company tax residence change and goes to another country, then the company has to pay the exit tax on the capital gains, okay, on the assets, on the value of the assets realized, on the difference of the initial and final difference, okay. This obviously slightly implemented different from among the European countries, but most likely the concept is the same. But in most of the European countries, still the exit tax is not applied to individual, except for Netherlands and Belgium next year, that basically is going to apply the exit tax with a rate of 10% on the capital gains, but it's still not clear how it will be implemented. So we're going to release a specific video on that if you're interested on Belgium, because it's our headquarters is set up in Belgium. But I can anticipate that it's full of exemptions, and way of pay this tax in the long term. And this is something that's extremely important when you analyze the exit tax. You not just have to analyze how much is the tax rate, but also if there are hidden deductions, a lot of exclusion or fewer exclusion, and what kind of capital gains and assets are subject, okay? Because if you're talking about only company shares, okay, but if we are talking about company share, crypto, bank accounts, or whatever type of assets, well, the analysis must be more, it has to be more a deep analysis, and we need to understand exactly the impact for your pocket. So different type of jurisdiction apply different type of exit tax. The concept more or less is the same, but also the different rates and different exemptions and exclusions. And of course, we here in ESENtaxa, we can help clients to either reduce the exit tax as much as possible, skip it completely in certain scenarios, and also understand if you or your company or your business is subject or not in Europe on this exit tax. Also outside Europe, we have this exit tax, United States, Canada, Australia. A lot of countries already applied this exit tax thoroughly, and also on individual. In Europe, it's still few jurisdictions are applied also on individual. Most of the cases it's for companies. And everything happens at the moment of switching the tax residence. Why? Because the country see that you, wealth person that are watching this video, is leaving their country, so you're not going to pay taxes anymore on their pocket, on back to the country. So the country want to take as much as possible before you leave. Why? Because they hardly manage to implement the taxation citizenship, which is extremely difficult to implement, and then try to find tricks and ways of taxing you before leaving. Try to hold your money as much as possible, okay? It's just a way to avoid that wealthy people leaving European countries for other destinations. If you want to know more about the exit tax, here in ESENtaxa we can help. We can definitely help you to understand how it works, how to avoid it, how to reduce it, of course everything legal. In the description below the video, our calendar link if you want to book a consultation, and subscribe the channel notification bell to always be updated whenever we release this kind of content. Thank you and see you in the next video. Bye.